Nuburu, trading under the ticker BURU, is currently sitting at $0.41, which represents a catastrophic drop of 19.92% on the day. When you see a stock lose a fifth of its value in a single trading session, the immediate question is whether you are witnessing a final capitulation or the start of a death spiral. Many investors, particularly those using accessible platforms like the Robinhood app or SoFi Invest, are likely staring at that percentage change in shock. But today's brutal price action is not an isolated event. It is the culmination of a long and painful disconnect between the company's ambitious technological promise and its harsh financial reality. The expectation for Nuburu has always been centered on its proprietary blue laser technology. The narrative was that this high-power, high-brightness light source would fundamentally alter key industrial processes, from welding the copper foils in electric vehicle batteries to advanced 3D printing applications. This was supposed to be a pick-and-shovel play on the future of manufacturing and electrification. Investors who opened an individual brokerage account with Fidelity or Interactive Brokers and bought into this story were betting on a technological edge translating into market dominance and explosive growth. The reality, as evidenced by the stock's collapse today and its longer-term chart, is that inventing a powerful tool and successfully commercializing it are two entirely different challenges. Today's sell-off appears to be driven by an overwhelming sentiment of doubt regarding the company's viability. The trading volume accompanying this drop is significant, suggesting that this is not just a few retail traders on SoFi getting shaken out. It points towards larger holders potentially liquidating their positions, losing faith in the company's ability to reach profitability before its cash reserves are depleted. The market is aggressively repricing Nuburu not as a high-growth tech firm, but as a highly speculative venture with a very uncertain future. We are seeing a flight to safety across the markets, and pre-revenue or low-revenue tech companies with significant cash burn are the first to be abandoned. Macroeconomic headwinds, specifically the persistently high interest rate environment, make the cost of capital expensive. For a company like Nuburu, which likely needs to raise additional funds to continue its operations and scale up production, this is a severe impediment. A capital raise at these depressed stock prices would be incredibly dilutive to existing shareholders, creating a vicious cycle where the need for funding pushes the stock price even lower. Investors using more sophisticated tools on Interactive Brokers' trading platform can see the order book, and it's likely showing a wall of sellers with very few large buyers willing to step in and absorb the pressure. This recent movement places Nuburu firmly in the category of a micro-cap stock facing existential questions. Many investors looking for investment help or using services like Schwab Intelligent Portfolios are advised to avoid such speculative assets. Yet the allure of a potential turnaround often draws in those with a higher risk tolerance. The challenge for Nuburu is that its technology, while impressive in a lab, has not yet translated into the widespread commercial adoption needed to generate meaningful, consistent revenue streams. The sales cycle for industrial equipment is long and requires convincing large, established manufacturers to alter their existing processes. This is a tall order, especially when economic uncertainty makes those potential customers hesitant to commit to large capital expenditures. The performance of other speculative tech stocks like Plug Power, PLU, or even struggling former growth darlings like Opendoor, OPEN, shows a similar pattern of investor sentiment turning sour when the path to profitability becomes too long or unclear. Even the performance of a market leader like Tesla stock demonstrates how sensitive valuations are to projections of future growth and profitability. When compared to the established ecosystems of giants like Apple stock or the undeniable demand driving Nvidia stock, Nuburu's position appears incredibly fragile. Nuburu Inc. itself is focused on a very specific niche, industrial-grade blue lasers. Unlike more common infrared lasers, blue light is absorbed much more efficiently by certain metals, particularly copper and aluminum. This makes it theoretically ideal for applications like battery manufacturing, where welding thin copper foils is a critical step. The company's business model is to design, manufacture, and sell these laser systems to clients in the e-mobility, consumer electronics, and defense sectors. The initial excitement following its public listing was based on the prospect of securing large contracts with major automotive or electronics manufacturers. However, past financial reports have shown slow revenue growth and significant operating losses. While the company has announced partnerships and development agreements, the market is clearly signaling that these have not been enough to build confidence in its long-term financial trajectory. The apathetic response from the market suggests that these announcements are being viewed as minor developments rather than transformative deals. Looking at its financials through a platform like Fidelity Wealth Management would reveal a balance sheet under considerable stress, making the current cash burn rate a primary concern for any potential investor considering self-investing in the company. Looking ahead, the future for Nuburu is balanced on a knife's edge. The bull case, however faint it may seem today, rests on the company announcing a landmark deal with a major top-tier customer. An agreement with a leading EV manufacturer or a large consumer electronics firm could validate the technology's commercial viability overnight and provide a much-needed capital infusion or a clear revenue pipeline. This would be the ultimate catalyst, proving that the expectation of its technological superiority can become a market reality. Another potential positive development could be a strategic investment or even a buyout from a larger industrial technology company that sees value in Nuburu's intellectual property and is willing to fund its path to scale. Comment below what you think is more likely for Nuburu, a game-changing partnership or a buyout from a larger player. On the other hand, the bear case is what we are seeing play out in real time. The most significant risk is the company's liquidity. If Nuburu cannot control its cash burn or secure new financing on acceptable terms, it faces a real threat of insolvency. Further share price declines could also lead to a delisting notice from the exchange, which would be a major blow to its ability to raise capital and would relegate it to over-the-counter markets, where liquidity is far lower. Competition is also a factor. While Nuburu touts its unique technology, other companies are also working on advanced industrial laser solutions, and a larger, better capitalized company could easily outmaneuver them. In conclusion, the brutal 20% drop in Nuburu stock today is a stark reminder of the immense gap between a compelling story and a sustainable business. The initial expectation was built on the promise of a unique technology set to transform key industries. The reality, reflected in the market today, is that of a company struggling with the immense challenges of commercialization, cash flow, and a difficult macroeconomic environment. For investors using Fidelity ETFs or SoFi ETFs to build diversified portfolios, a stock like BURU serves as a lesson in the high risks of concentrated bets on speculative technology. The path forward is fraught with peril, and while the potential for a high reward still exists if the technology finds its footing, the probability of failure, as priced by the market today, has grown substantially. The narrative has shifted from one of opportunity to one of survival, and the company's management is now under immense pressure to bridge the gap from innovation to income before the market loses all remaining confidence. Proof. Don't forget to like, comment, and share this video to support the channel. Also, let us know what your thoughts are about Nuburu.